My name is Alejandro Zambrano. I'm the Global Chief Market Strategist with ATFX. I'm also the Editor-in-Chief here at investingcube.com. I'm going to take a look at the markets. It's been some exciting days, and we're going to take a look at the markets. Hope trading has been going good for you. It's been doing quite good for me recently, and hopefully that can continue. We're starting to see some nice volatility in the market, and that obviously helps quite a lot. But we are heading into the final few weeks of the year, and traditionally the last 2 weeks tend to be quite quiet, but then tend to see quite a lot of volatility not a lot of volatility, but some volatility after that. Just need to know where to look, right? And that's what I'm here to help with. Now, we have a chat box here. You're most welcome to write in it if you have any questions, and yeah, we can take it from there. Okay, so let's begin. Euro versus the USD. So the Euro versus the USD is a bit complicated because you have the dollar and the Euro sort of trying to battle it out and figure out what's going to happen. And I'll give you the levels today, but that could change following the election in the UK on Thursday evening. We'll have the results for that. Because you see, last time we had a big move in the pound. The pound declined with about 3,000 pips. The Euro USD declined with about 1,000 pips. So about a third of the decline in the GBPUSD was reflected here. And we don't know exactly how the pound is going to react, but it should be volatile. Okay, so this is the Euro versus the USD then. So what can we say about this today? So we had a break to the downside here, okay? And that took out that very little short-term bullish momentum we had, and the reason for that is crash forward. The known-from payrolls figures were really good. They were really good, and that obviously caused people to buy some dollars across various currency pairs, and definitely in the Euro USD. Now the market might go up a little bit, and you know what? I think this is gonna be more. It's gonna consolidate for longer. I think it's gonna be a bit difficult, but if you look at it from a bigger picture perspective, and as I wrote in the Q1 outlook, which we'll hopefully have published later this week, if not next week, well, I said that around these levels, people are probably going to try to sell. And I'm happy to stick with that view that around 110, 85 or 90, people might sell with stops on the other side here. And then they're looking for a move to the downside. Beyond that, if that doesn't hold, yeah, we might go a bit higher, maybe 112, 20 or so. But as long as trade below the August 7th high at 112.42, then I'm going to remain bearish. So again, to summarize, I'm going to treat the trend as bearish below this high. And I do think we can go down. I did myself buy some dollars ahead of the NFP, but not in this pair. GBP versus the USD. So we had some decent success here as well. We said the break to the upside could lift things upwards, and it's definitely going upwards. And we're pretty much almost at that target. If we treat this like an inverse head and shoulders, with this being head, left, and right shoulder, and you had a break here, and this is your target. So we're pretty much there now. And if you just look to your left, you'll see you have some major highs here. This is the high from March 2019. So this is the March high, and you have all these other highs here around this level. So it should limit price. I think here as well, it's gonna be should be a bit quiet just ahead of the election as people refrain from entering new positions. I mean, obviously the market's trying to go a little bit higher, maybe 132, 132.50. But I truly doubt that we're going to trade about 133.88 just ahead of the election. The way I would look at it post or around the election, it would be like this. You have one big level here, which is that March high at 133.90-ish. Then you have the November low at 127.72. So if we trade above this level, and this is the easiest, trade above that level, probably head to the psychological level of 140. And then we'll see what happens, because in the longer run, we're still dealing with a downtrend. And just because we get Brexit over with, doesn't necessarily mean that we're gonna be out of the woods. Because yeah, okay, we might have the divorce, but how is the new relationship going to look like? And that is the challenge, and that's probably going to take a bit more time. I think the conservatives have an idea that things need to be done ahead of the end of 2020. However, I think some of the UK officials themselves think that it's not going to be possible, which makes sense. It usually takes about 7 years to negotiate deals. So we'll see what happens. They're already been at it for 4 years almost, or 3 years in a few months. So it's probably going to take a bit more longer, unfortunately. So I think that's still going to weigh on things. But I think if we have maybe if we have a conservative government and we get out of Brexit, we might see a little bit of a push. Again, if we check out 133.90, these levels here, we might go up to 140, okay? But realistically, it'll go up a bit and then it'll go down lower. And then you have the November low. If we took out the November low, then I think we're going to revisit at 1.122 and then maybe 120, and then we'll see what happens. So short-term bullish at 127.50 and then probably capped up here. If you're really bearish, then I think you're probably going to be selling at 133-ish area here with stops just above 134. Dollar versus the Japanese yen. So this market is a bit weird in one way. So you have the Nikkei 225, which is the Japanese stock market, is really bullish. If I show it to you, and it had a decent run over the last few months. You can see that from the lows, this market is up with about 17%, which is really solid, right? And overall, we're dealing with an upwards market, and that should, lift the dollar yen. Then you got the US 10-year government bond yield, and it looks like this, and it bottomed out here in September. And if you take a step back, you can see it bottomed out from major levels. So this should go up higher. Japanese stock market, I think as well, can go a bit more higher. So I would have argued that this was going to go up higher. And then you have as well the NFP figures, which is rock solid, right? So I think this should have been trading higher, but it's not. Now, there could be one explanation to it, and it's a bit difficult to assess at this moment, but the government of Japan just issued on Thursday, they issued a statement that they're going to introduce big fiscal spending. And if I remember correctly, it accounts to 1.9% of Japanese GDP. And that's quite a significant amount of money. So that could potentially explain why the Japanese yen is holding its ground, because the spending should probably boost GDP growth. And depending exactly how they can spend the money, might even cause a bit of inflow back into Japan, money-wise, potentially. So that could explain. The other thing I can maybe that could potentially influencing here is that we have a new set of tariffs that should kick in on December 15th. That's the next sort of set of tariffs from the US. But as you probably noticed yourself, President Trump has been very, very quiet about this, haven't given us any warnings that that might be happening. And I think it has to do with the fact that he wants to see the stock markets at current levels, and he doesn't want to spook the market too much and the economy rather too much, as you know, the manufacturing sector is still not doing very good. You have the ISM manufacturing index, and that one is at 48, the latest reading. Let's see if I can find a chart. I'm not sure I'll find a chart. So this is the ISM manufacturing index. So obviously then the index itself was soft in 2016, and then President Trump got elected. He cut taxes and so on, boosted the economy. As you know, stock market soared in 2016 and 17, but then this index plummeted because of higher interest rates in the US, and because as well because of trade wars. So obviously, causing trade wars, causing that to deteriorate or causing continuing that, I think it could have a political cost because he was supposed to help these guys, but according to the ISM indicator, they're losing jobs right now. They're contracting at least. Actually, according to the employment indicator as well, they're losing jobs, according to this estimate. So I think what's happening here is that he doesn't want to, rock the boat too much, and I suspect that we could have no tariffs introduced on December 15th. Might happen afterwards, and it might happen before the 2020 election, but it looks, at least right now, President Trump wants to protect the growth and the high stock markets to create a positive vibe around him ahead of the election. It could be that some people are buying yen though as a hedge against that, so selling a bit of dollar yen, that pair, while maybe being long stock markets to potentially hedge a bit. So what can I say here? Well, technically, I guess that's what could, or fundamentally, that is probably what is driving price. Technically here, there's not really a big change to what we said last week. The trend is bullish. I'm on 108.23, and from this level, I'm going to be bullish. If we take this level out, we'll probably go a little bit lower and then up and then a little bit lower again. Crude oil prices, they're very close to the highs here. We have this upward channel, and I'm not going to change my mind. I think we probably need to go a bit lower. As the minimum, we need to see probably something like a 50% correction, which would take price down to 57.29, but I would prefer a steeper correction. But obviously, the longer this goes here, then, most likely, if it goes down, say if it goes down a little bit and then up, then we'll probably just try to buy on a pullback. But I want to see how the market reacts next time we go down here. And I'm still looking to be bullish from 56.19. Gold prices. So we're also within this little channel, and I didn't have a strong view here. The market just went down to this lower channel, and I think if we do trade below something like 1449.76, then this market can probably come down tumbling. But I'm not really sure exactly how we should be trading this right now. We are within like some big bearish flag, or whatever you want to call it. It's certainly some sort of consolidation phase, and then we'll have some sort of bullish or bearish breakout. And I wouldn't mind just doing nothing here for quite some time here until this figures out. In the very short term though, it does look like it wants to head a little bit higher, but again, I wouldn't get too excited about this. S&P 500. So S&P 500 moved up quite aggressively, and this makes perfect sense. I hope you did not short on the S&P 500 immediately after the news from the US non-farm payrolls. When you see strong reports like that, it's just common sense that you probably would not short. I did put out a note on the German DAX, and in the German DAX I warned about that. But in the German DAX, the trend remains bearish for now, so there's not too much we should change here. It's the same thing here. What you could have done if you wanted this is if you said, okay, this is like the last good NFP and then it's just going to turn bad, then I would have waited for the market to settle, and then maybe today, like right now, maybe sell. But if this takes out the high here, it's going to go up, and it's going to go down, and then it's probably going to go up again. So what's going to happen is that this low here will become my new trend funding level. So if it goes up, it's going to go up, and then probably down a bit, and then I'll turn bullish. And then we'll probably target the ascending triangle pattern here, which is the pattern I mentioned on the break here in October. As for the German DAX, it's still sort of in this little move to the upside, and here you're not seeing the convincing moves that you're seeing in the S&P 500. Maybe because the German economy overall is not doing as good as the US economy. And then technically here, as again, I insist to be bearish below the January 28th high of 13,390, and I think we could probably go a bit lower. Finally, we're going to finish off with the dollar index, and the dollar index looks to have survived another hit here. So we have this channel I've been working with for quite some time. Well, actually not since 2018 or so, but the channel itself has been working for quite some time. And what's interesting here is that a few weeks ago, the market pretty much bottomed out from the lower section here, and then it went up, and then it went down, it went up, and it went down. And now the market here, they didn't go all the way down to the lows, but it quite nicely here because of the non-farm payrolls. And I think the likelihood of the price trading much lower now has declined by quite a bit. So I do suspect we'll probably trade upwards towards the median line, which today is at 98.79. And there's a few setups, a few pairs out there where it makes perfect sense to buy some dollars. Okay, let's see if you guys have any questions. So we have True Invention saying, hi Alex, hello to you. And we have Marvin as well saying good morning and hoping that I had a good weekend. Yes, thank you so much, Marvin. I had a good one. It was quite busy actually, though. I had to work a bit because I'm working on the Q1 reports for ATFX, and I managed to finish things up. So we're gonna have that at one up here, not necessarily this week, maybe next week. You'll also be able to find it here in quarterly market forecasts. We also have a new report, which is called the Investing Cube Top Trade Ideas for 2020. We hope to have that one live probably by later today or tomorrow. And that's a bit different because the ATFX one here brings ideas from the ATFX team in Hong Kong and Dubai, whereas the other one is the writers here. So I wrote an outlook, Nicholas wrote an outlook, Angeline wrote an outlook, and then we have Eno as well writing an outlook. And you're gonna see it here on the sideline here. Hopefully you can check it out. As long as you remember, you can download it exactly as everything else here. Okay, I think if we don't have any questions, we're gonna wrap things up. Yes, before I forget as well, I'm gonna be away for this week, so there's not gonna be any more live webinars this week, and I'll be back, I think, on the 18th of December. I will be doing some videos though for you, but I'm going to Dubai, so I'm gonna be traveling, so I'm gonna be there for a week or so. So I'm not gonna have I'm not gonna have the ability to upload videos, so to do live webinars, but I will produce probably a video or so later this week. So there will be some updates, but not as frequent. If you want to stay on top of what I'm doing, as always, you know, you got myself. You can find me on Twitter at AlexFX00. I'm also available on WhatsApp. Just ping me, and on that link should be working. If not, just go to here and you just ping me, send me a message, and I'll add you to my list. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow. Sorry, I'll see you guys later this week, hopefully on our recording. Have a great day. Thank you, and bye-bye. Cheers.